Hey guys, what's up? Today I'm back with another video, and this is going to be a very important one. Most traders actually get this wrong, and today we're going to go over market structure shift. A lot of people struggle with questions like, where is the market structure shift? Is this a valid structure shift or not? Is this just liquidity, or is it real direction change? So in this video, we're going to break all of that down. I'm going to show you my exact criteria for a market structure shift, how I know when it's valid, how I know when it's not, and how to clearly separate a structure shift from a liquidity sweep. The most important thing I want you to take from this video is the importance of displacement. When I say displacement, I'm talking about the strength and speed of price moving through a level. Displacement is what tells you whether the market is actually shifting structure or just grabbing liquidity. Let me explain this with two simple examples. A lot of times, traders can't tell the difference between a liquidity sweep and a market structure shift because visually, they can look very similar. So let's say the market puts in a high, price comes down, and then price comes back up toward that high. In the first example, price slightly pokes above that high, breaks it by a small amount, and then immediately displaces back inside the range. There is no strength. There is no follow-through. Price breaks the level, but it does not move away from it with intent. This gives me confidence that the draw is likely lower. This is not a valid market structure shift. In this situation, I would not expect higher prices. If price comes up to a high, breaks it just a little, and then quickly falls back into the range, I would consider this a liquidity sweep, not a market structure shift. Now let's talk about what a real market structure shift looks like. Again, price puts in a high, price pulls back, and then price comes back up and breaks that high with strong displacement. Notice the difference. Price does not just poke above the level and reject. We get a strong move, strong momentum, and a clear push through the level. After that displacement, price can pull back. This is where you would look for entries. This is where you might look for a fair value gap or other confirmations. This type of move shows real intent. This is what I would consider a valid market structure shift. So to summarize, if price breaks a level and immediately returns back inside the range, that's more likely a liquidity sweep. If price breaks a level with strength and displacement and holds above it, that's a market structure shift. Now let's go to the charts and look at some real examples so you can see this clearly in live market conditions. So for me to take any kind of trade, there are two main ways I look for a market structure shift. The first way is after liquidity is swept. This can be either buy-side liquidity or sell-side liquidity. Once liquidity is taken, I want to see a structure shift in the opposite direction if I'm looking to take a reversal trade. The second way I look for a structure shift is after price fills a PD array. For example, price might fill a 15-minute fair value gap or a 1-hour fair value gap. After that happens, I'll zoom down to a lower time frame and look for a break in structure to confirm direction. Now let's look at an example so this makes sense. Right here is a perfect example. You can see that we have a sell-side liquidity level. Once price approaches this area, we zoom down to a lower time frame and focus on what price does there. Notice what happens next. Price comes down and sweeps the sell-side liquidity. Now, after liquidity is taken, what am I looking for? I'm looking for a high to be taken with strong displacement. And right here, that's exactly what happens. Price takes the high, but more importantly, look at how it takes the high. We do not just poke above the level and immediately fall back down. We get a strong push through the level. That displacement is the key difference. This is what tells us that this is not just another liquidity sweep. This is a valid market structure shift. Notice how price does not instantly reject. Notice how price holds above the level after breaking it. Because of that displacement, we now have a clear shift in structure to the upside. So what do we look for next? Now we look for an entry model. On the 1-minute time frame, you can see a fair value gap forming. This fair value gap becomes our long entry area. The plan is simple. We wait for price to pull back into that fair value gap, take the long entry, and target opposing liquidity. In this case, I would personally target these highs. And as you can see, price moves cleanly from the entry and goes straight into those highs. This is a textbook example of a valid market structure shift. Notice something very important here. We do not look for buys before displacement. We only look for buys after price shows strength and intent through the level. That displacement is what confirms the shift. Now let's go ahead and look at a few more examples so you can see this repeated again and again. Now let's look at another example right here. Price comes back down into a 15-minute fair value gap. This is another situation where a long trade could potentially form. But here's the important part. Just because price enters a fair value gap does not mean I automatically take a long. I need confirmation. So I do the exact same thing every time. I zoom into a lower time frame and look for a market structure shift to the upside. Now watch what happens. We get a high formed here. Price breaks through it slightly, but notice what happens next. It instantly rejects back to the downside. There is no displacement. Because of that, I am not expecting higher prices. In fact, I can reasonably expect price to move lower again. So I do nothing. Then we get another high formed right here. Again, price takes the high, but it immediately closes back down. No displacement. What does that tell me? Once again, I expect another move lower. Now let's keep watching. We get a new high formed here. And now look closely at what price does. This time we get real displacement. Price does not just poke above the level. We get a strong candle, a clear push, and price actually breaks and holds above the level. This is now a valid market structure shift. Notice the difference. Now that we have displacement, the story changes. So what do we look for next? Now we look for a fair value gap. On the higher time frame, you can see that price has swept this low, and at the same time, it is reacting from a PD array, specifically a higher time frame fair value gap. This adds even more confluence. Now the plan is simple. We wait for price to pull back into the fair value gap, place our stop loss below the low, and plan our targets. Targets can be the recent highs or an unfilled fair value gap above. Now watch how price reacts. You can see how price respects the fair value gap and allows the market to do its thing. Price bounces cleanly from that higher time frame fair value gap and continues higher. And notice something very important. We do not enter earlier, even though price was already inside the fair value gap before. We only enter after we see displacement and a valid structure shift. That first high created at the lows did not matter. What mattered was the first high where price actually displaced through the level. That displacement is what gave us permission to look for longs. And as you can see, price moves up and taps that recent high exactly as expected. Now let's go ahead and look at a few more examples so this becomes even clearer. Moving on to another example, here you can see that we have a bearish 15-minute fair value gap. Price comes up and taps into this fair value gap. Now the most important thing here is this. We do not change our process. Whether price taps into a liquidity level or a PD array, the process stays the same every single time. So after price taps into the fair value gap, we drop down to the 1-minute time frame and start observing what price is doing. The first thing we focus on is the short-term lows that are being formed. Right here you can see a low that was formed just before price fully entered the fair value gap. Now watch what happens. Price breaks through that low with strength. This break of the low becomes our market structure shift to the downside. Once structure shifts, the next thing we look for is entry confluence. And right here, you can see that we have a fair value gap formed just above the market structure shift. Now the plan is simple. We wait for price to retrace back into this fair value gap. Once price retraces into the fair value gap, we place our entry, keep our stop loss above the high, and plan our targets. For targets, we can easily aim for this previous low. Now let's see how price plays out. You can see that it takes some time for price to retrace back into the fair value gap and activate the limit order. Once price taps into the fair value gap, it respects the level perfectly and continues straight into the target. This is a clean example of following the same process step by step without forcing anything. Price respects the fair value gap, structure confirms the direction, and the market does the rest. I hope you guys enjoyed the video. I really hope this helped you understand proper market structure shift and how to identify valid ones the right way. If you learned something from this video, make sure to like the video and subscribe to the channel. If you want to connect with me, you can join my Telegram and Discord. All the links are in the description. And if you want to learn personally from me, you can check out my mentorship program. The link is also in the description. I've also left discount codes for funded accounts down there if you're interested. That's it for this video. I'll see you in the next one.